Hello, Discover Card here to explain our cashback match. We match all of the cashback you earn at the end of your first year, automatically. It's that simple. Discover. Exceptionally common sense. Learn more at discover.com/match. Limitations apply.
Just be mindful. Just keep an eye out. It's the psychological low that's going to make the difference. Here we go. Dollar yen still moving higher. Pound talking. This is what I'm trying to establish with dollar yen, like in light of the actual disparity between Bitcoin and dollar yen. What's gold doing? Gold's not doing much. It's spiked low, but it's not doing anything. Let's see. Come on. Bitcoin move, man. What are they saying? What's he saying? Let's see if he does it. Fed power, recent economic developments and outlook calls for a faster bond. Okay, here we go. Fed power economic developments, outlooks. Okay, cool. You know what? We need to get onto that. We need to go to these guys right here. That should put things to bed. Give us information. Here we go. What's he saying? Fed powers, we're still seeing fast economic growth. That's good news. Rising COVID cases in recent weeks as well as Omicron pose threats to the outlook. Of course, look at that, man. Come on, give me another post. Give me another post. Fed Powell, despite better labour market conditions, the economy has been making quick progress towards its job goal. Okay, so Bitcoin's holding. Dollar yen, are you moving up still? You keep pretty much staying high in that range. They're containing the range. Why is Bitcoin not moving? Gold? Gold ain't doing anything. It's all dollar yen. It is all dollar yen. Here you go, pumping up the mic. There's that bit of a delay there. Come on. Here we go, Bitcoin coming in. I'm trying to establish the disparity. If dollar is rising, all right, principally, Bitcoin should be dropping because Bitcoin is traded against the dollar. But if the sentiment is positive across the board, all right, that means risk is back on. People are excited to put money down. People want to put into risky investments. Bang, off it goes. Any pair against the US dollar is probably dropping right now. See, look, Bitcoin's pulling back. Let's have a look at GBP USD. What's that doing? There you go, GBP USD dropping, taking a tank to the downside. Euro USD dropping. There you go. All pairs against the US dollar are dropping. Aussie dollar pulling back. So it's all basic, it's all on the dollar. This is what I'm trying to say with the disparity of Bitcoin and dollar yen. Dollar's rising up. Look at the strength of that move, man. Mad move to the upside. 3 times ADI, super extended to the upside, but they've been accumulating in this range for quite some time. Look, dollar yen has been in this zone for absolutely ages. We've been expecting this move to the upside, come back up and recover the previous red vector candle right here. There we go. So happy days on that basis for dollar yen. Keep an eye out on it. Range daily high in sight. So they've absorbed all the information. Come on, Bitcoin, what have you got for us, man? Make the move. Okay, what have we got here? Check CryptoCraft. Why? What's on CryptoCraft? What's CryptoCraft saying? Here we go. Power inflation will run above 2% of our goal. Recent economic developments. Yeah, we've seen this. Anything about crypto? Nothing. There's nothing. Nothing about crypto. It's all about this guy right now. Short-term move by Bitcoin. Here we go. Still finishing lower. Coming back up towards the daily open. Needs to finalize that daily open. What time is it? 7:30. So, let's have a look on the other time frames. Oh, violet vector candle. Okay, this could be a short-term thing, guys. Violet vector. Very promising. Let's have a look at Ethereum, how Ethereum's doing. Ethereum is holding well. There's our projection for Ethereum. Happy days. They took that zone and pulled it straight back up. Unbelievable. Okay, they're still holding above yesterday's high. That's good news. Above the daily open. That's great news. But they tapped the psychological low again and snapped it back. Don't like that. I don't like that. Let's have a look at some altcoins and let's see if they got the result of this. Who's got Flux has moved 25%. Is up 25%, sorry. Okay, so it came up towards its range daily high. See what I mean about the range daily high and the psychological ranges? Look. How would you understand that these ranges were going to come into play? The importance of the psychological ranges are massive. There ain't no TikTok traders here. Alright, they won't be drawing out these support and resistance points. The first high and the first low of the week established. Look what it's done. These are really important zones, the psychological high and low. It takes the first high and the first low across every single pair across the board. It establishes the range that the market maker is going to trade from. Is he building longs? Is he building shorts? He's moved price back into that range again and brought it down again. What is that saying? Bitcoin, let's see what's happening. Come on. It's coming back up to recover. That violet vector, that's good news for us, ladies and gentlemen. Let's have a look at the CME Bitcoin. There you go, same again. Happy days. Range daily high potentially if they do decide to follow through once Powell stops talking. That's good news for us. Let's keep Bitcoin back up, man. Keep recovering that move, man. I wanted to get that pattern done on the smaller time frame. Where is it? Here we go. Coming up into the pattern. 1 minute time frame. Stop on rise, drop, retrace, continuation to the upside. ADR, range daily high is what I'm looking for. Let's see if they do follow through with it, ladies and gentlemen. Let's have a look. Put a little bit of music up. Maybe not. What even is the range daily high? Was looking for psychological high notice this week, or did we just stick with last week's? No, each week is different. What's XRP done? XRP's moved up. Nice move by XRP. Yeah, everything's moving up, ladies and gentlemen. But the question is how long is it going to move up for? Let's have a look at the total cap itself. Total cap across the board. Nice trailing move to the upside. Here we go. Look at that. Big push up. Coming up towards the previous vector point. So coins across the board right now, ladies and gentlemen, are potentially coming up to recover the previous vector zones. So just be careful of that. Be extremely careful. Okay. Is there good news from Powell? He's talking about things that are looking positive. Everything's okay. Coronavirus is causing a bit of a problem. Alright? But everything seems to be okay. But we will only know what his response is to everything if price does continue what it's doing. See a big W formation on the total market cap itself. So that means there are coins out there formulating this play right now. Your goal, ladies and gentlemen, is to go and look for coins that are coming away from this pattern itself. Alright, see if they're actually leading out. So let's go to the altcoins a second. Let's just pull up a random pull of coins to see what they're doing. Look at that, man. That is crazy. Look at that shift out of the zone. Range daily high. Beautiful. Look at that W formation right there. Coins moving out. Let's look for another one. Elrond. Shifting out. Look at the recovery of the wick right there and shifting out of the zone. Arcs. Cool. Quite a choppy coin. No interest in that one. Solana. Potential W formation. Well, 3 hits to the low. Inverted head and shoulders. Quite obscured pattern there. Quite choppy. But then now they've come up. Rise. Retrace. Continuation to the upside. Stalling at the 200 EMA. CARDANO. $10. W formation right there. Again. 1. Coming out. W formation. Zen. Not so much of a pattern itself. RSR. Not so much. Not interested. FTM. 3 hits to the low. Fair enough. Super. Very small pattern right there. Theta. Sharp W formation right there. Hits to the low, back, retrace, continuation out. Very sharp. Jasmine, here we go. You ain't doing anything. Render, very sharp. Ooh, sharp move up, come back down, starting a new pattern formation. Can't even break out of the psychological high range just yet. Phil Coin, nice sharp W formation. Do you get what I'm doing here, ladies and gentlemen? You see? Based on the market cap chart itself, we can see that there are coins that are trying to come away from the zone right now, but I'm not actually seeing a coin that's done a very good job of doing so other than HNT. Helium, isn't that? Yeah? Is that helium? Is that helium? I think it is. There you go, look at that strong move up. M5 pivot point. Look at that. M3 projection zone pivots right there, yeah? Rejects at that point, comes back down, tests the M2 pivot. M4 projection zone is expected. The M3 gets confirmed. We expect the M5 zone. Alright? Yeah, Steve, man. Steve was trying to trick me today. Carver, what's it doing? Coming up, previous recovery of the wick. Man, we spoke about Carver last night, ladies and gentlemen, in the stream. On its way to recover this wick towards the psychological range. Here we go. That play right there. Happy days. Prom. Same pattern. Now it's literally make or break for these patterns, ladies and gentlemen. We're going to know if they hold precedence. Alright? Are they going to be shifting out of the zone or are they going to just fake everyone out? Bitcoin. Coming back up slowly. Let's look on the 5-minute time frame. We've got a nice slow drift to the upside. Recovery of that violet vector candle. It looks very promising, guys. Yesterday's high taken psychological low has now been confirmed. It's going to come away. It needs to keep moving up to confirm the psychological low. M5 pivots are the median of the standard pivots. M5, M1, M2, M3, M4 are the median points of the standard pivot points. Should we trust these violet green candles? They are moving too fast. Aren't they supposed to move slow and steady for it to be legit? Fast move up, mean recovery after. That's exactly what I'm saying. You've got to be careful. On the higher time frames, you can see you've got green vector candle happening here. What happens with the market maker? He moves in threes, ladies and gentlemen. So we might just get another vector moving up. So this could be shifting out of the zone. All right? But you've got to be careful because it's all based on what's happening now. The market right now is going nuts. So you've got to be careful. Alright, they can whip and whack price in all sorts of areas. Wait until Asia tonight where we will know if Asia's going to respond in the same way. Alright, because there won't be no news announcements. They will just be responding to the news. How do we not know that Asia's marking up price? Or New York is marking up price for Asia to set it down, drop it, and then coming into tomorrow's session, we see price moving back up slowly so the true trend resumes. This is why, as a day trader, I get the luxury of being able to exploit this move, wait for it to hit the highest point possible, close my trade, go to bed, no worries. Swing traders are going to be probably holding this trade. And they're going to be, itching, scratching, waiting to see what's going to happen next. And if you're swing trading and you're using a little bit of leverage, how close is your liquidation point? There's so many things to factor in. Day trade, in my opinion, fast in, fast out, done. But that's because that's what I've chosen to do. It doesn't mean you guys have to do that. It's what suits you guys. It's what works with your schedules and your everyday life. Here we go. Blue vector candle, recovery of the vector. Okay, look, they recovered it, rejected the 800 EMA yet again. I don't like it. Be careful. Do I think this could be the end of the downtrend or we could still move to the 40s? The problem is, what I need to see from now on, right, is I need Bitcoin to just continue up now. It needs to continue up. This whipping and whacking of this zone right here is getting retail traders trapped because everyone's gone long on Bitcoin because they saw a little bit of activity. They initiated the stop hunt low right here in this wick, hit the zone and then retraced it back up. Looking at the book map itself, look man, you can see what's going on. They are literally taking the mick. Rise up, down, lots of liquidity at 50k, 430 Bitcoin at 50k. There is no imbalance, well, there's an imbalance favoring limit buys in the chart. Alright, so we could see coming in right now, volume coming in, here we go. Here we go, is it coming up? It's going to test this area here to see if the traders are going to come in, which sits at the wick. So let's see if they're going to do that. Bitcoin breaking inverse correlation with the dollar, yeah.
Whoa.
Liquidity, that's rough, man. Dollar, what's dollar doing? Dollar's pulling back. 3 times ADR, it's a big move for the day. Still not made it to the range daily high just yet. Let's see if we're going to see the same relationship here. 4-hour time frame ending soon. Yeah, new 4-hour candle. That's going to be a game changer as well. Let's have a look at the 4-hour candle. Red candle, green candle formation. Violates the actual 50 EMA, but can't close above it. It's got 13 minutes to close above the 50 EMA. If it can't close above the 50 EMA, then that's a problem, man. It needs to close above the 50 EMA. Elaine, Grimsby, how you doing? Mad love. Yeah, everyone's gonna say big trap, big this, big that. As day traders, it doesn't matter. You know? Clive, that's no problem, my friend. It's just another confluence. You know, don't worry about that. That's why I stream it, my friend. So I can give you the information on the stream. We know where the points are in the chart. Listen, bookmap is for day traders, for the scalpers. You can look at it for a swing trading perspective, and you can zoom all the way out, all right? This is a bookmap right now. Nothing at 95, nothing, well, there's a little bit down here, okay, probably about 1,000. But look at the range that you're looking for, all right? This is for scalpers, ladies and gentlemen, people that are, you know, day traders. That's where the benefit of the bookmap comes in, day trading, all right? So don't feel obliged that you need to get this so that you can be successful in trading overall. Nah, man, it's just another confluence tool, you know? Here we go. 10 to 8. 10 to 8 in the even. Still got an hour or so of the New York session. Bitcoin needs to close above the 50 EMA today. It has to do that by the end of the session, man. Because then this move will just pretty much summarize what their intentions are. Got to be extremely careful. When looking at bookmap, if price comes to a colored zone, does that mean it's hitting support and going up or down? So each zone itself, this means high. See that there? You see that there? That's a spoof, ladies and gentlemen. Big order came in, induced traders to believe, oh, there's lots of liquidity there, and they got rid of it. That's a classic example of a spoof. What you want to see is you want to see them stay static. Look at this. This is a static order line right here. They're not getting rid of those orders. Well, there it is. It's gone. Gone and come back in again. This is on the smaller order form as well. Okay, the smaller order book. When you zoom in and out, it gives you a different representation. What you want to be focusing, look, the 50k, it looks static, but over time, if they are looking to try and trap traders, they're going to keep that there with the belief that it's going to go to 50k. But as it starts to make its way, you'll notice it starts to change color and turn orange or yellow. So that really is important to pay attention to. Here we go, Bitcoin coming up. How long we got? 10 more minutes until it closes on the 4-hour candle. This is really important. It has to close above the 4-hour 50 EMA for us to verify that this could be the point that they try and at least come back up above the psychological high range. Really important. Dollar pulling back. That's consistent. What's gold gonna do? Is gold pulling back? Gold's coming up now. Happy days. Let's see if they do it, ladies and gentlemen. Let's see. What have we got here? Today, the Bitcoin price. Who said that? How long do we have for 50k close? Well, 50k, man. I mean, it's until the end of the trading session, which will be tonight at 12, when they actually start a new trading day. All right, so we've got, what? Nearly 5 hours until Bitcoin needs to come up above to 50k for it to be a solid move, and then going into tomorrow, a nice continuation up. But look, man, they keep bouncing away from the psychological high and the 50, so that's a bit of a problem for us. What have we got here? You know, people do not have the bookmap. How do spoofs work? Okay, so the way the spoof works is it's an illegal, not an illegal thing, but in an unregulated environment, you can get away with it. But what spoofs are is orders get put into the order book, all right? and people can see those orders, and in essence it's designed to just probe people to commit liquidity to the chart with the belief that those orders are going to be there, and then they take them away. All right, so just adding and taking orders, taking away. There's a video on YouTube that talks about it. A guy explains it really well. Go check it out. Bank Sunday, how you doing, bro? Does hitting the red zone in the book map mean hitting support and going up, bouncing, or continuing down? This is what we're looking at doing, okay? So look, this is the point in the book map itself. This tells you that this is the liquidity where most liquidity is at, all right? That's where there are a lot of orders in the book map currently right now. It says right now that there's 429 Bitcoin in that range, all right? As we go lower, all right, you can see it's a bit of a lighter color, so it's not as dark as red, okay? And then you see the yellow, which is not that much liquidity, and then you've got the blue, which is just retail traders liquidity. If I get rid of the retail traders orders, this is all we see. We can see right here that you've got the markets with the bigger liquidity. Now remember, this is Bitcoin across Bitstamp, Binance, FTX, Coinbase, and Kraken. All right, so it's all the liquidity across those exchanges. All right? The principle is that the market is going to edge towards where the liquidity is at. But the idea is to work out from this point right here in the chart, how soon are they likely to come to that point? The principle says this. Let me open this. The idea is that each of these zones, you see these zones right here, these are zones where prices previously come to, all right? So that's where orders came into the chart, or the order book itself. Price is going to edge towards these zones to test the same trader's intention, because at that point, it could have been full of limit sales, it could have been full of limit buys, and they're now moving price in that direction to attack that liquidity again and induce traders to commit more liquidity at that point. This is the thing about the book map itself, guys. It's designed for you to scalp. Okay, take advantage of these little peaks up and down. You're chasing orders. That's all you're chasing. You've got the orders in the chart that are already sat, and then you've got, that are pending to get taken, and then you've got the orders in the chart that are already in the order book that's filled. So the idea is if it comes down to this point right here, it will trigger interest to bring price back up again. But as you can see, there's not that much liquidity in this area here. So that could mean that they could bring price down and go beyond that zone. But in order for it to show support, the orders would need to start coming in beforehand. Do you see what I'm saying? See that there? And did you see that order there? Okay, so liquidity is coming in, which now price looks like it's moving back up away from it. So the interest is there. If this is a spoof, all right, just to trap traders to believe it's going to go down there, this will disappear in a few moments. So that's the algorithm. Look, you can see orders getting placed and taken off. Just pay attention to this area here. Bitcoin should come up towards this zone. If it releases this liquidity here, happy days. Then we would have confirmed the traders' interest in this zone. Look at this zone here. Just keep an eye out. See, they've added more liquidity now. All right? So let's just keep an eye out on that. See, now it's changing color. It's going lighter. I hope it actually disappears to prove my point. There it is, look. Changing, taking away and adding. I want this to disappear. I really hope this disappears just to make a point. It's getting darker now. We've got 93 Bitcoin in that range. So they've come up to test this zone right now, and it doesn't look like we're going to get any more limit buys. So the limit sales could be taken over. The book map is imbalanced, favoring limit sales. So we should see these orders getting taken. We should see it. Now it's changed color. It's gone a little bit lighter. They're now going to test the liquidity in this range right here, because that's where the commitment's at. Here we go, here we go. If they're going to bring it down, that'll turn darker. Here you go, look, it's getting darker now, so they're going to now fill this order here. Let's see if it's just a fake move. Do you see what I'm saying about how to break down the book map? This is what you do, and then you change it. You can place orders on here. You can do whatever you want with it. Set your API key to whatever broker it is that you've got, and make orders up and down in this chart. But right now, this is the area of interest right now. Are the limit sales going to get hit? Which will cause price to come down. See that? They added, they took away. There's still that order line right there. 82.59 Bitcoin right there. So 140 nearly, 150. So let's see our order there. So the idea, guys, when you sit and watch bookmap itself, right, here we go. They should cancel this now if they're going to keep moving higher. That should disappear. Come on. Come on, disappear, man. That disappeared. Dollar pulling back. Yeah, dollar's pulling back as expected. So now Bitcoin should be going up. Still got that order there. They're now trying to create a cluster of orders. They've got trapped liquidity here. Because they induced the traders to step in, limit sales. Now they're going to try and hit those limit sales up again, take out their stops. Because what this doesn't tell you, ladies and gentlemen, where the liquidation points are. Alright, doesn't tell you that, which is something they're working on. Here we go. Come on, I just want to see it so I can then pay attention to Bitcoin on the other charts. If they hold this range here, then it's likely that they're going to get these orders filled. Here we go. Come on. I can't believe it. Taking too long. Anyways. Oh, it's on its way. They're holding, they're adding now. There it is. Look at the liquidity right there. Now, here we go. So that principally means that they are likely to come down to this point. The book map now is imbalanced to 27% limit buys. So we should see Bitcoin coming down now. But it doesn't necessarily mean that it always will. That could be a spoof. So interest could step in right now in this range. You see what I'm saying about the book map? You have to be quick with there you go, look, gone. They didn't even send price there and it disappeared. That's your spoof right there. That's the spoof right there. Didn't get filled. Disappeared. Yeah? That's what this is. Now look what's going to happen. They brought it back in. This is the example of spoofs, ladies and gentlemen. Now Bitcoin's coming back up because they got the interest in this zone. They didn't need to trick any more players. Now they've moved back up. This is what I've done. Man, I've watched this for so long. You just start to pick up patterns and behavior when you pay attention to it. You can't download this and get this platform and expect to understand it by reading the documentation that is provided. No chance. You have to sit and watch it. You have to pay attention to it and take understanding of the hybrid system and apply it into the way price action moves. Remember, this is all limit orders. On the right side, before the white line, are orders that are due to get filled in the order book. Alright? The orders on the left side are ones that are sat filled in the order book, and you've got cancellations as well. The idea is to try and establish a relationship between the buyers and the limit buyers and the limit sells. Is the market maker going long when it's going down? Is he getting ready to go short as it's going up? Because every time limit sells are hit, price comes back down and then it shifts back up again. Limit buys are being hit right now, and they're just going to keep pulling price down, keep pulling price down. Look, it's just crazy, ladies and gentlemen, man. Look, all that liquidity there. So that liquidity right there is potentially these guys that have already been into the chart. So they're adding more liquidity to show support for Bitcoin. You've got this liquidity up here as well. So the game is to try and play in between. These dots right here are deltas, green deltas and red deltas. Alright? Now we view delta a little bit differently in this channel. We understand that a negative delta does imply that the market is showing selling pressure, but at the same time it could imply the market maker's going long. So if there's a high delta and price is dropping, we know the market maker's going long. Bet the delta on this right here was massive. If you go onto exo charts and pull up the delta chart against net longs, net shorts, you'll see it. You'll see it. The delta would be negative, but then it shifts out of the zone. I thought delta means that if it's negative selling, if it's red, it means there's lots of selling pressure. That inclines people to go short. Well, guess what? They've trapped the short traders to the downside and they shift back up. Happy days. Welcome to trading, ladies and gentlemen. So, I hope that helps you guys, man. If you are new to the channel and you want to get access to these indicators, they are free of charge. The hybrid system is free of charge, and I spend every single day talking about it on this channel. I've got a playlist in the channel which is called Understanding the Hybrid System. Alright? Make your way to the website. Here we go, new 4-hour candle. Here we go. Make your way to the website, which is in the description of this video, and you can download all the indicators free of charge, guys. There's playlists on how to apply them and everything as well. There's the Discord, so make your way over there and join the Pattern Watchers family, man. Because when we see green vectors, we're preparing to go short. When we see red vectors, we're preparing to go long. And that's the basis of this strategy, ladies and gentlemen. We've been paying attention to this zone for quite some time, alright? And we ain't been caught with any surprises just yet. Alright? Cool. Ladies and gentlemen, I won't be going live tonight, but I thought I'd give you the heads up now. Bitcoin can close above the 50 EMA before the close of tonight at 12 a.m. Alright? Then there is a good chance that Bitcoin's going to start to recover this previous zone. Okay? But they need to close above the 50 EMA on the 4-hour time frame, which is, the price is 48,838, which is slightly above the psychological low. Until it closes strong and breaks into the psychological range itself, there's no point in looking for longs, ladies and gentlemen. You need the conviction. Alright? If you want to enter marginal entries, be my guest. But you really want to be focusing on its behavior in and around this zone. This is a crucial zone. Alright? The vector candle itself has not closed at its highest point. So just be careful, they can snap it back. And it looks like they're on their way to doing that. Alright? So listen, mad love and respect to all of you guys. Alright? Can you help me not get a super chat ignored? Don't want to be greedy or selfish, just highly valued. Well, super chat, where's your super chat, bro? Hold on a second. Here we go, sorry my friend. Always been a big lurker, big fan, but what do you do? Any chance of a quick peek on Ethereum, Bitcoin, 4-hour big bounce of 200 EMA, fractional disparity, Ethereum, Bitcoin. I know I've got that here, here we go. Sorry about that, bro. Look at that, man. Just look at that. Straight down, range daily low, and bounces away from that zone. Okay then. So, the problem that we've got is they are exactly in the same spot where Bitcoin is. Everything right now, ladies and gentlemen, is around the psychological ranges for the week. Just look at the coins, alright? So just look at XRP, where you at? Psychological range. TRX, where you at? Away from the psychological range, fair enough. Solana, where you at? Psychological range, it's gone above it, that's fair and square. SCL, PSUD, whatever that is, near its psychological range. Matic, where you at? Psychological range. Bitcoin, psychological range. BNB, psychological range. Nowhere near the psychological range. What I'm trying to say to you guys is this. Prices roaming around these areas where the market maker initially started the spread that he's going to trade from throughout the rest of the week. He builds his intentions in this area. And when he moves price away from those zones, we can understand that he favors lower prices because he may be looking to go long. So he moves price down lower. He's come back up to that range now, especially with Ethereum, Bitcoin. So with that basis, are we likely to see Ethereum come back up and break the zone? Before it does break that zone, we need to see price go up, retrace, continuation up, which in relation to Ethereum's price itself, got to come above that zone, man. And this is where they set the range. Okay? Alright then. Man. That is crazy. Mad love and respect to all of you people. But just be mindful. Take care of tonight. Take care with the Asian session tonight, guys. I'm not going to be going live tonight because I've just gone live right now. But I hope this serves purpose to all of you. If you are new to the channel, be sure to like and subscribe. Happy days, guys. Take care of yourselves, and I'll speak to you later. Peace.
The world has waited 5 years, 11 months, and 29 days for Adele's newest album. Don't wait another second. Pre-order your copy of Adele's 30 in limited edition crystal clear vinyl today, only at Walmart.com.
Well, your child care, made for caretakers, it is certainly part of it, not just for children, but for older people. It has been pointed out by many that the stock market is high, people's portfolios are stronger. They may go back to being a one-income rather than a two-income family. The same thing with people's houses. People buy they have a mortgage and with leverage, and the house price increases, the equity they have in their home might have doubled, and they might reach the same conclusion. So and people have savings on their balance sheet because of forced savings, because they couldn't spend on travel and things like that, and also because of government transfers. So for all of those reasons, and it's hard to know exactly the part each of them plays, we have a situation where we've had a shock to labor force participation that is not unwinding as quickly as many has expected. And people, in effect, a good part of it is voluntary. people, and this is how they want to maximize their welfare, and that's certainly their choice. In other cases, it's something that will abate very quickly if and when the pandemic gets under control. And the longer the pandemic goes on, maybe the less likely that people will come back because they're, they get used to their new life and they lose contact with their old jobs. That's what the evidence would say. So it's a range of things. It isn't that the economy lacks stimulus. Usually in every other expansion, it's that there aren't enough jobs and people can't find jobs, and we're stimulating demand and trying to get demand to come up. That's not the problem here. The problem is a supply side problem, which what it would take to work it out, I think it's going to be time. And number one thing it would really be to have the pandemic get under control. That's what everyone would really like to see. What does the labor force, what does the labor market look like in a world without COVID? That would be the thing that we'd really like.
Quick note while he's talking about labor force participation getting better once the pandemic's over, I just want to mention that you've got quite a few movers at the moment. You've got Robinhood moving up more. You've got Cloudflare, cybersecurity firm moving up here. Look at that, Affirm, buy now, pay later, moving very well right now. Ethereum back over 4,000. Nvidia up 4.5%. Still got a little bit of pain over here left over at Roku after that price downgrade. A little bit of pain over at Snapchat left. Big advertising plays for next year. Matterport moving up right now. Recovery stocks like Carnival Cruise Line's not doing great because of that Delta surge. Robinhood back over 19. And we'll keep an eye on some of these things moving. But definitely some things very excited about expectations here.
Participation would move down.
And he's still talking about labor force participation.
We can get back up closer to where we were in February of 2020, and indeed for the year or so before that, is a good one. And I mean, what we can do is try to create the conditions. There's a lot of good for society when you have a tight but stable labor market where people are coming in, they're getting into the labor force, they're getting paid well. In the labor market we had before, we had the biggest wage increases were going to people at the bottom end of the wage spectrum for the last couple of years. There were just a lot of really desirable aspects of a labor market like that. Higher participation is one of them, and we'd love to get back there. But again, ultimately, we have the tools that we have, which are essentially to stimulate demand and also to control inflation. And really, it might be one of the two big threats to getting back to maximum employment is actually high inflation. Because to get back to where we were, the evidence grows that it's going to take some time. And what we need is another long expansion like the ones we've been having over the last 40 years. We've had, I think, 3 of the 4 longest in our recorded history, including the last one, which was the longest in our recorded history. That's what it would really take to get back to the kind of labor market we'd like to see. And to have that happen, we need to make sure that we maintain price stability.
Okay, let's go to Edward Lawrence at Fox.
Thanks. Thanks, Michelle, and thanks for taking the question, Chair Powell. So I was looking at the census data there for estimate monthly changes on sales, and what you're seeing is fewer people spending at restaurants and drinking places, more people spending at grocery stores. You see electronic sales down 4.6% month over month. Also, department store sales down 5.4% month over month. How concerned, or what is your level of concern the consumer may be turning away from this economy or pulling back because of inflation, the virus, or something else? Thank you.
We see consumer expenses very strong in this quarter. I don't know, Edward, whether you're talking about more shopping online versus shopping in the store, but consumer demand is very strong. Incomes are very strong. Because people are going back to work and they're getting wage increases. Admittedly, some of the wage increases are being eaten away by inflation, but nonetheless, incomes overall are going up really significantly because of increased employment, and spending has been strong. There may be something in the seasonality that this year's holiday spending may have been pulled forward, and of course there may be effects from Delta, and there might be going forward from Omicron. But fundamentally, the consumer is really healthy, and we expect personal consumption expenditures to be pretty strong in the fourth quarter.
Okay, let's go to Mike at Bloomberg.
Mr. Chairman, the median forecast for inflation in this month's or this meeting's economic projections has been revised up significantly for 2021, but barely moved for 2022 and 2023. You've said you expect inflation to fall significantly. Is that because you're going to raise interest rates, or because the virus is going to fade and the effects are going to fade? In other words, is it a question of when, not if, you raise interest rates? And does it suggest that maybe your critics are correct and you might be afraid you're behind the curve?
Actually, I'm looking at the SEP here, and the median forecasts for core and headline inflation did move up by 0.4 each. So that's a significant, in an SEP, that's a pretty significant move up. It's based on both of those things, I suppose. I do think there's a broad expectation among forecasters, including our own, that the bottlenecks will alleviate sometime over the course of this year. If you look at where blue chip forecasts are, which is the group of well-resourced large forecasting operations with a long track record, they'll show inflation coming back down significantly toward the back end of next year. I would say, though, as well, that our policy should begin to have an effect. There will be a lag, but it should begin to have an effect on that as well. That's the most likely case. I guess what the thing I would want to say, though, is we can't act as though that's a certainty, and we're not going to act as though that's a certainty. There's a real risk now, I believe, that inflation may be more persistent, and that may be putting inflation expectations under pressure, and that the risk of higher inflation becoming entrenched has increased. It's certainly increased. I don't think it's high at this moment, but I think it's increased, and I think that's part of the reason behind our move today, is to put ourselves in a position to be able to deal with that risk, and I think we are in a position to deal with that risk. We need to see more data. We need to see how the inflation data and all the data evolve in coming months, but we are prepared to use our tools to.
This is literally the perfect thing he could say. He's literally saying, look, I don't think it's a high risk that inflation is going to remain, but the risk has increased. We still think inflation is going to go down by like half next year, but yes, it has gotten riskier that inflation is a problem, especially because wage inflation could creep up, and rental inflation we already know is going to creep up, because rental inflation measured by the CPI is a total lagging indicator, lags by like 6 months. We already know that, so that's already expected. But this is literally the perfect thing he can say. He's literally saying, we're going to watch the data, and if it's a problem, we're going to deal with it, and we think we can deal with it. He's not sounding hawkish. He's sounding realistic, and I'll tell you, folks, the market loves it.
I've had now for a decade and more, a 4-part financial stability framework that we use so we can hold ourselves to the same kind of framework and not just treat each event individually. And there are 4 key areas: asset valuations, debt owed by households and businesses, funding risk, and leverage among financial institutions. So I would say asset valuations, I'm going to go really superficially here, but asset valuations are somewhat elevated, I would say. Debt owed by businesses, and households. Households are in very strong financial shape. Businesses actually have a lot of debt, but their default rates are very, very low. But nonetheless, it's something we're watching. Funding risk is, by and large, low among financial institutions, but we do see money market funds as a vulnerability, and would applaud the SEC's action this week. Leverage among financial institutions is low in the sense that capital is high. So overall, financial stability, that's how I would make an overall characteristic, but we break it down into those pieces. In terms of the things that we're looking at, it's the things we've already talked about to some extent. It's the emergence of a new variant that could lead to significant economic. If there were to be a variant, for example, that were quite resistant to vaccines, it could have another significant effect on the economy. We don't see that. We don't have any basis for thinking that the new variant that we have is that one, but it's certainly one we're looking at. I would say, cyber risk the risk of a successful cyber attack
Yep.
is, for me, always the most, one that we would be very difficult to deal with. I think we know how to deal with bad loans and things like that. I think more a cyber attack that were to take down a major financial institution or financial market utility would be a really significant financial stability risk that we haven't actually faced yet. So I could go on with a list of horribles, but I think that's a decent picture of where I would start.
How about the cryptocurrency issues? Anything that worries you there that's going on in there in terms of, it's obviously a lot's happening in that sector. Is that on concern you at all?
I think the concerns there are not so much current financial stability concerns. I, of course, would support the views expressed in the President's Working Group report on stablecoins. Stablecoins can certainly be a useful, efficient, consumer-serving part of the financial system if they're properly regulated, and right now they aren't, and they have the potential to scale, particularly if they were to be associated with one of the very large tech networks that exist, and you could have a payment network that was immediately systemically important, close to immediately systemically important, that didn't have appropriate regulation and protections. The public relies on the government and the Fed in particular to make sure that the payment system is safe and reliable, as well as the dollar, and to provide a safe and reliable, trusted currency. So, but I do think those are longer term. In terms of the more the cryptocurrencies, that are really speculative assets, I don't see them as a financial stability concern at the moment. I do think they are risky. They're not backed by anything, and I think there are big consumer issues for consumers who may or may not understand what they're getting, and there's certainly developments in the markets that are worth following, which are really not in our jurisdiction, but things like the kind of leverage that's built into and those sorts of things is certainly worth watching.
Let's go to Nancy Marshall-Genzer at Marketplace.
Chair Powell. Hi, Chair Powell. Thanks for the question. Going back to inflation, is the Fed behind the curve on getting inflation under control?
So, I would say this. I actually think we are well positioned to deal with what's coming, with the range of plausible outcomes that can come. I do, and I think if you look at how we got here, I do think we've been adapting to the incoming data really all the way along, and noticing and calling out that both the effects and the persistence of inflation, of bottlenecks and labor shortages and things like that. So we've been calling out the fact that were becoming longer and more persistent and larger. And now we're in a position where we're ending our taper within the next, by March, in 2 meetings, and we'll be in a position to raise interest rates as and when we think it's appropriate, and we will, to the extent that's appropriate. At the same time, we're going to be seeing a few more months of data. I don't actually think we're out of position now. I think this was an important move for us to make. I think that the data that we got toward the end of the fall was a really strong signal that inflation is more persistent and higher, and that the risk of it remaining higher for longer has grown. And I think we're reacting to that now, and we'll continue to adapt our policy. So I wouldn't look at it that we're behind the curve. I would look at it that we're actually in position now to take the steps that we'll need to take, in a thoughtful manner to address all of the issues, including that of too high inflation.
Let's go to Evan at Market News.
Hi, Chair Powell. Thank you. I was wondering if we should still be seeing the taper and interest rate hikes as separate. And secondly, in the last cycle, the Fed started shrinking the balance sheet when short-term interest rates were about 1 to 1.25% range. Do you think the FOMC might be able to potentially start running off assets before that this time?
Are they separate? So our interest rate, yeah, they are separate tools. So that, the asset purchases are a separate tool.
Someone says course members getting Christmas treats from Kevin. Yeah, that's because I may have been sending out some buy alerts. Which, if you want those, remember you get lifetime access to the programs. Use that code Xmas link down below.
Stance. The extent to which they'll be separated in time is something we haven't really discussed at the committee yet. We will be discussing that obviously in coming meetings. I don't think that the last cycle there was quite a long separation before interest rates. I don't think that's at all likely in this cycle. We're in a very, very different place with high inflation, strong growth, a really strong economy. That as I mentioned, the SEP medians are for 4% growth next year, 3.5% unemployment at the end of the year, and the headline inflation of 2.6% next year, core at 2.7. So this is a strong economy, one in which it's appropriate for interest rate hikes. So they're separate, I would say. Your second question was?
My second question was about runoff.
Runoff, yes.
In the last cycle.
So with the balance sheet, we did have a balance sheet discussion. It's our sort of a first discussion of balance sheet issues at our meeting this week. We'll have another at the next meeting and another after the meeting after that. I suspect these are interesting issues to discuss. Didn't make any decisions today. We looked back at what happened in the last cycle, and people thought that was interesting and informative. And but to one degree or another, people noted that this is just a different situation, and those differences should inform the decisions we make about the balance sheet this time. So haven't made any decisions at all about when runoff would start, but we'll be continuing to, in relation to when either liftoff happens or the end of the taper. But those are exactly the decisions we'll be turning to in coming meetings.
Thank you. We'll go to Scott Horsley at NPR.
Thanks, Mr. Chairman. I think you said a few minutes ago that the inflation that we got during the pandemic was not the inflation that you anticipated when you crafted the framework, and you described it as a collision of a lot of monetary and fiscal stimulus with these supply side hiccups. Does that mean the stimulus was mistaken, or is the inflation just a consequence of that we have to put up with?
Supply wall. It's the supply wall he talks about. The vertical.
Expressing any judgment about the stimulus in that comment. What I'm saying is, there's a sense among some that you wanted inflation. This is what you wanted. How do you like it? And the truth is, this is not the inflation what we were talking about in the framework was inflation that comes from a tight labor market, right? So we had 3.5% unemployment for a period, and we had inflation that was just barely getting to 2%. And I think in that setting, our thinking was we can afford to wait to raise rates until we see actual inflation rather than preemptive, because no one had seen what 3.5% unemployment would look like with high labor force participation. By the way, no one had seen what it would really look like for an extended period for decades, and we didn't know what the inflationary implications were. Turned out there was barely 2% inflation and no sense that it was gaining momentum and that kind of thing. So we incorporated that into our framework. This is something completely different. That's a situation where you had a very, very high level of employment and low inflation. This is literally the opposite, or it has been the opposite, where we have very high inflation, and we've had it since the labor market was in terrible shape. It had nothing. So far, this inflation has really nothing to do with tightness in the labor market. It does have to do with strong demand, and strong demand was supported by the Fed. It was supported by Congress. I'm not making any judgments on Congress. It's not my job, but I will just say we're coming out of what we certainly hope will be a once-in-a-lifetime, certainly historic, the first really global modern pandemic, which looked at the beginning like it might cause a global depression. And, so we threw a lot of support at it, and what's coming out now is really strong growth, really strong demand, high incomes, and all that kind of thing. People will judge in 25 years whether we overdid it or not, but, the reality is we are where we are, and we think our policy is the right one for the situation that we're in.
Thank you. Let's go to Brian Chung.
Hi, Chairman Powell. Wanted to ask about the bond markets. When you see the 10-year at 146 basis points, do you have any sort of concerns about an environment by which you might be hiking interest rates into? Would you prefer the curve be a little bit steeper? What are you gleaning from the bond market actions over the last 6 weeks?
So I think the short end actions are easy to understand, which is, they're basically very policy sensitive rates at the short end, and it makes sense that it's reacting to changes in expectations for policy. I think a lot of things go into the long rates, and the place I would start is just look at global sovereign yields around the world. Look at JGBs, look at bonds, and there's so, a much higher yield on U.S. Treasuries by buying USTs rather than bonds, and you can hedge the currency risk back into yen, back into euros, and still be way ahead. So in a way, it's not surprising that there's a lot of demand for U.S. sovereigns in a world, in a risk-free world where they're yielding so much more than bonds or than JGBs. So that's a big part of it. I also think, there may be some assessment in there of what the neutral rate is or what the terminal rate is. I don't know about that, but I would just say that we write down our own estimates of the terminal rate or the neutral rate of interest. Those are highly uncertain, and we'll make policy based on what we're seeing in the economy rather than based on what a model might say the neutral rate is. We all have the experience of the last cycle, where we all through that cycle were trying to estimate what the neutral rate was, and it turned out, I think we learned a lot from seeing what happens. We wound up cutting rates 3 times after raising them to 2.25% to 2.5%. So I'm not troubled by where the long bond is. I see that it's low. We're really focused on broader financial conditions. We're focused on maximum employment and price stability.
Thank you. For the last question, we'll go to Greg Robb.
Thank you very much. Chair Powell, I wanted to give you the opportunity to talk about something I've heard that's been discussed, that, your pivot towards a tighter policy, hawkish policy stance had something to do with the timing of your re-nomination by the president. Thank you.
Sure. I'd be happy to talk about that. So as I mentioned, we got the ECI reading just before the November meeting. We got the labor market report 2 days after the meeting, and then 1 week after that, I think on the 12th of November, we got the CPI reading. It was really the CPI reading in concert with those two. And I just came to the view over that weekend that we needed to speed up the taper, and we started working on that. That's a full 10 days or so before the president made a decision on renominating me. So honestly, it had nothing to do with that at all. And I just thought, this is what we got to do. My colleagues were out talking about a faster taper, and that doesn't happen by accident. They were out talking about a faster taper before the president made his decision. So it's a decision that effectively was in more than in train, and to the point where people were talking about it publicly. So that's what happened, and it had absolutely nothing to do with it whatsoever. We're always going to just do what we think is the right thing, and I certainly will always just do what I think the right thing is for the economy and for the people that we serve.
Just a quick follow-up. I guess that some people are saying that it was the stimulus in March that was sort of over. We didn't really need all that stimulus, and that there was talk even then that would be a mistake and it would lead to higher inflation, and perhaps that you didn't push back as much as you might have otherwise.
I didn't push back at all, and the reason I didn't, and there was lots of talk about that, but not from the Fed, because that is not our job. We are not the CBO, and we're not elected by anybody. So we take fiscal policy as it arrives at our front door, and we don't comment. We make our own assessments inside the Fed, but it's really not our role. And I think it's very important that we stay out of that business no matter who's in the White House, who's in Congress, it's just not our job, and it's something we avoid pretty assiduously. Thank you.
Thank you, Mr. Chair. Thank you, everyone.
Boom! Chair Powell wrapping up. Woo!
Literally went as freaking expected. Yes, this is perfect. Did lots of buying before. I also did lots of buying after. Well, probably kind of during. And the market is loving this. I mean, Jerome Powell killed it. The market's loving what's happening. This is it, folks. We're done for the year, in my opinion. The negative catalysts are gone. I'm sure there'll be others that we're not seeing right now. But I mean, look at this, folks. This is insane. This is very, very good. Let me just put it this way. I may have gone into margin a little bit. Look, the catalyst we had written down on November 29th, okay? This is why you subscribe to the channel. On November 29th, we talked about this. On November 29th, we said, holy smokers, we got lots of negative catalysts coming for December, and it's going to suck. Lucid was going to go down, we said. Neo was going to go down, we said. It plummeted. Robinhood was going to go down a lot because of the lockup. Oh, yeah, that definitely happened. And you want to buy it at the bottom. We said the Congress, the debt ceiling, and the budget deficit would be a nothing burger. What happened? They were nothing burgers. We said a catalyst would be CPI and the FOMC. Yep, literally the last week between these two reports has been the ugliest. We said that there would be year-end profit-taking and loss-taking, and that Omicron is probably a nothing burger. Kind of what we got. I mean, also kind of what Jay Powell literally just said. I mean, I hate to say it, but I think we did pretty damn well. So I just did a ton of buying this morning, a lot of buying, multi-seven figures of buying of various different cryptos, of different stocks, both before and after and during, literally everything. If you want to see all of those, always remember you can take advantage of the alerts, all of the alerts that come out in the Stocks and Psychology Money Group, linked down below. All right, let's now do a summary. Everyone always comes for them summaries. All right. Give me a second. Where's my clapper? No, I don't need a clapper. Hold on. All right. Woo! The alerts are in the Stocks and Psychology of Money Group, Kyle James. Thanks for asking. Ah, man, that was exhausting. Okay. All right, you ready for a recap? All right, here we go. Hold on, too. 1 second. That's pretty good. We should put this up. For all the people who want to watch this tonight or who joined late, let's do a quick recap and then let's go look at sticks. Okay, who's ready? Yeah, keep saying that. Just freaking go hard. All right. I got a one take it. That's the problem because we're live. All right. Hey everyone, me Kevin here. Here's a complete breakdown of everything that just happened at the Federal Reserve and why the market is reacting the way it is. Let's get right into it. First, interest rates were kept at zero, along expectations. Nailed it. Doubled the pace of the taper from $15 billion to a $30 billion reduction in bond purchases. That means we are still printing $75 billion, but we are reducing as expected. This is good. The market likes when things happen along in accordance with expectations. The market does not like uncertainty. Anytime there's uncertainty, stocks plummet. That's why we've had so many red days leading up to this meeting. Every time there's uncertainty over what Jay Powell is going to say or do, the market falls. Same thing is true when you look at the beginning of, like right before the election, just as an example, of 2020. Lots of uncertainty, stocks fall. Very normal. Now, the Federal Reserve has essentially guaranteed us a rate increase in 2022. This is important to know. And what we could do is we could look at a summary of economic projections. This is a little bit messy. I'm going to explain it. There's a lot of information here. The blue dots are from the Fed. Everything else is my garbage. What you need to pay attention to, we're going to highlight it with this little green highlighter is right here. Okay? This is what you got to pay attention to, this yellow highlighter. And that is a guaranteed rate increase, essentially, at least one rate increase. However, the median forecast is for a triple set of rate increases in 2022. That would bring us to just below 1% or an expectation of 0.9%. Keep in mind, there are only 8 roughly double up a rate increase in 2022. 38% of the meetings in 2022 will contain a rate increase. We do not believe the first one will be January. Jerome Powell made it clear we will not raise rates until we finish tapering. We will not finish tapering until March. Jerome Powell was asked, hey, are we going to have a lag between when you finish tapering, aka March, and your next meeting, aka May? Jerome Powell answered this. So now I'm going to remove this little Kevin's Guess thing here because I agree with what the market believes. Now, based on Jerome Powell's answer, that no, we do not need to have a lag between the last or when the taper finishes and raising rates, which basically means March. That's what he's saying. Rates going up in March. The federal funds futures are already pricing in a 90% chance that rates will be up for the first time by April. But that means they're going to do it in March, based on the market's expectation, because that's when the meeting is. Okay, then we're expecting 1 to 2 rate increases in 2023 and 1 to 2 rate increases in 2024. I wrote down that there's only like a 5% chance we would actually see rate increases in January. Very unlikely that we'll see rate increases in January. Again, Jerome Powell made that pretty clear as well. Now, the Federal Reserve has also changed their summary of economic projections regarding the unemployment rate and inflation rate. This is very important. This is critical, okay? This chart is mission critical right here. The Federal Reserve realizes that inflation is worse. Jerome Powell said this numerous times, specifically because of Delta. Before Delta, we had 5 months of CPI inflecting down, and crypto fell during that time. Now, you have CPI a lot higher because of those supply chain constraints. Basically, Jerome Powell saying we hit a wall with supply. We thought we would see inflation because of all the fiscal and monetary money printing, essentially, and the helicopter money we've been doing. We're actually seeing it because of supply chain issues. You go to a vertical supply curve, which basically means, hey, we want car, and then instead of price going up diagonally, price is just going up straight. It's just a visual depiction, doesn't really matter. But anyway, Jerome Powell does believe, and the Fed does believe, together, that inflation will go down to 2.6% at the end of 2022, which is about half of where we are now. They have revised to the better their expectations on unemployment. They expect the unemployment rate will be 3.5% by the end of the year. They previously thought it would be 3.8%. They have also increased their expectations for GDP, which means they think the market is going to grow by 4% in 2022, which is more growth than they thought they would have had in 2022 when they first did this projection in September, or when they previously did this projection. We think we're going to grow at 4% despite the triple rate increases. The market has substantially priced in this interest rate news and this Federal Reserve news, and this is why, if you look at the S&P 500 and a substantial amount of stocks that have sold off heavily, you can see that we've had a substantial move to the upside here in not just the S&P 500, but many different tech stocks. The market is liking what they heard from J-Powell because they did not get rug pulled. This is why I put in multi-7 figures of money into the stock market over the last 3 days leading up to this meeting. Sent all of those alerts, of course, to everybody in the Stocks and Psychology Money group, and we talked about this in our private live streams, which you can have access to as well if you use that coupon code XMS before December 25th at 11:59 p.m. Now, part 2, I've also bought during the meeting, essentially right now, because there was always the chance that we did get a rug pull, and then you'd want to have money. Now we don't have a rug pull. Now we actually don't have that many catalysts of negativity going forward. Now, I'm going to talk a little bit more about what Jerome Powell said, but let me just quickly reiterate the negativity that we had on November 29th. November 29th, we thought Lucid and NEO were going to go down, went down. We thought the Robinhood lockups were going to be a disaster. You could watch this. December catalyst to watch. Meet Kevin. Type it into YouTube. We thought Robinhood was going to plummet because of the lockups. It did. Just YOLO'd on the dip, by the way, this morning on that one. I got some call options on that one. Full transparency. We thought Congress with the budget deficit would be a non-issue. We thought the debt ceiling would be a non-issue. Both of those ended up being a non-issue. We thought the FOMC meeting and the CPI release would be the biggest negative catalyst. They were. Obviously, profit-taking and loss-taking towards the end of the year with hedge funds and a lot of selling by corporate executives because of taxes going up. We already know that. Now, some of the other things. So this eliminates a lot of the catalysts that we had. The only catalyst right now is Omicron, which most of us think is really a nothing burger. And that this could actually be the beginning of the end of the pandemic, right? Okay, next. Then, Jerome Powell told us, look, inflation is well above our 2% target. It's going to continue well into next year. And there are things that could continue to increase inflation. Things that could continue to increase inflation are things like rents, because the stupid way they measure owner's equivalent rents lags rent increases by 6 months. So that is going to push inflation up in 2022. Wages could push inflation up in 2022. However, the Fed still expects inflation to halve by the end of 2022 as more of the transitory items come down, like transportation costs, food costs, and some of the other things that are affected by supply chain issues, like chips, cars, and so on. Now, why not stop all purchases of bonds right now? Why are you still printing $75 billion? Because they want to take a methodical approach and clearly signal to the market what they're doing. They don't want to rug pull the market, being very, very transparent and nice here. Now, Jerome Powell's basically telling us we're going to see liftoff in March, I wrote down. I kind of already explained that. Jerome Powell also says that we're probably not going to see a strong labor force participation recovery until the end of the pandemic. Omicron is a risk. However, listen to this line from Jay Powell, okay? Jay Powell literally said, quote, "People are learning to live with this." He's basically telling you, who cares? Like, no, obviously, that's not what he's saying, but like, that's what he's signaling. He's like, well, we don't think Omicron's that big of a deal. He kept referring to how bad Delta is, and how Delta is surging right now, hitting the northern part of the country, the northeast, and coming down the east coast, and the wave of Delta is a big problem. But Omicron, he did not talk about that much. Now, he did talk about how this was big, okay? He says, yes, inflation is expected to be higher, but he says, look, we're being straight up here. We think that we are doing the right thing by raising rates 3 times and tapering the way we are right now because of the more persistent inflation that we're seeing. We think this is the proper reaction to get rates back down. He was asked, hey, but wait a minute, doesn't Federal Reserve monetary policy sometimes take 18 months? I'm glad Jerome Powell answered this, because conventional wisdom, economics studying, when I studied economics for an economics degree, I was taught this as well. You have an 18-month lag. This was a very Milton Friedman argument. Jerome Powell said exactly those words. But Jerome Powell says because of the way he communicates now, or the way the Fed communicates now so clearly, he thinks the markets actually price in a lot of these moves by the Fed much sooner. Interest rate moves, taper moves, whatever, and that a lot of this gets priced in by the market much quicker. I want to be clear here. Jerome Powell did not sound bearish today. He sounded realistic. He gave us literally the best presentation he could, and the markets are cheering on that. Now, the S&P, a lot of tech stocks have done very well. We'll go back to the sticks, later on here, but he's being pretty crystal clear. He talked a little bit about cyber risk being a very real threat. He talked about seeing cryptocurrencies as risky, but he did not see them as like an exigent financial risk. He did mention that consumers seem to be at solid levels of leverage, like elevated levels, but not concerning levels. He did mention that businesses were at elevated levels of leverage as well, but no signs that businesses were defaulting. If anything, things looked businesses had a very, very low default rate. That was his wording. Very, very low default in businesses. Relatively low household debt, despite the fact that margin is at all-time highs. Household debt relatively low, probably because of real estate equity and asset equities, and asset equity, so equity in other assets. He did say that valuations were relatively high, but that overall he does not believe we are behind the curve, and if anything, they're moving appropriately in response to the concerns the market has right now. Again, the market has been cheering this. Volatility index fell immediately below 20. I would expect to see fluctuations over the next few days, but honestly, I hope that this is the beginning of the Santa Claus rally, and I hope you will follow me in the moves. Well, I mean, not financial advice, don't copy my moves, but I hope you appreciate the moves that I post in the Stocks and Psychology of Money group, link down below. You can use that Christmas coupon code XMAS to get the best pricing on it. Pricing does go up over time, and it'll go up next on the evening of Christmas. Thank you so much for watching this video. Appreciate y'all, and we'll see you in the next one. Cool! That video is done. Now what we're going to do is we're going to jump on over to the closing live stream. So if you want to hang out, you can. Fed talks over now. We're gonna look at the sticks because we're only 15 minutes away. It doesn't make sense for me to start a new live. So what Jerome Powell just said is gonna be our next video. So what I'm gonna do right now is I'm gonna look to see what's moving in the market, where I think there are still leftover deals because some things have moved quickly. I do think there are gonna be fluctuations, so don't buy crap right now and expect to be up the very next minute. You are going to see. You're going to see fluctuations as the market tries to digest all of this, but I think we're pretty early on this, especially if you've been watching the whole time here. So S&P having a tiny little bit of a cool down here as we go into the close. I just quickly have to hit export on the video that we just filmed, and okay, we're good. Cool. So S&P chillaxing a little bit. Let's just go ahead and finish our stream out here. Let's see what's going on. You do have Roku sitting at 102, relaxing a little bit as we go into the close here. A little bit of selling into the close. Now keep this in mind, okay, folks? This could be very, very interesting. And I think this is quite possibly what's happening. Oh, wait a minute. This is actually an opportunity. Oh my gosh. I didn't even think about this until, well, like, I just started thinking about it. Okay, hold on. I think you're going to like this one. This is a thesis, but I think you're going to like this thesis. Okay, so you know how at the end of the day, institutional investors have to sell because people called up their hedge fund managers and they're like, man, this market sucks. I'm going to buy gold. And they withdraw money from the funds, right? Guess when those institutions make those sale transactions? Well, most of the time, right at the end of the day. Like, literally, right now. I would not be shocked if what you see at the end of the day here is actually a SPY sell-off. You're going to get this SPY sell-off because people already put in their sell orders that are just now getting filled with their institutions. People taking money out of their retirement accounts, this, that, whatever, who cares, right? So you got institutional selling pressure. And really what we're potentially creating here at the end of the day is another opportunity to buy the dip, which is really cool. Oh, crap. Hold on. Stupid. There we go. Sorry, my little microphone. There we go. Anyway, so you're getting potentially another opportunity to buy the dip towards the end of the day here because the weenie babies who wanted to sell this morning are just getting executed towards the end of the day. So this right here, this sell-off at the end, I think is actually a representation of more fear and fear porn that we had this morning, and not actually people in mass right now trying to get out of the market. I don't know, but I'm making bets on a continuation of the end of the year rally. We just don't have that many negative catalysts left. Like, what's going to happen? Like war with China? Or war with the Ukraine? Yes, like literally, those things could happen. Are they likely to happen? Not really. Are we expecting more Evergrande drama? Not much that's going to move the market. Do we think China's going to potentially keep forcing the delisting of stocks? Oh yeah, definitely possible. Do we think, are we going to get another CPI report anytime in the next 3 weeks? No. Is the Fed going to speak in the next 3 weeks? I mean, maybe in interviews and stuff, but probably nothing major. Is Congress going to do anything in the next 3 weeks? No, because they're off. How are they going to do anything? They're not there. So, like, the amount of potential catalysts we have that are negative, my belief is, are extremely low going into the end of this year. I think people literally got fed exactly what they wanted to hear here. Now, we could all be little pawns, and we could just be getting screwed by the Fed here, who's telling us what we want to hear. We're going to throw our money in, and then we're going to go bankrupt when the real rug pull happens next year, when they raise rates. But honestly, the Fed just told us we're going to raise rates. You don't think the market's starting to price that in? Newsflash, it is. So the market knows what happened at the end of 2018. The market does not. Like, investors don't want to be part of that. And so I think that's why we've had this like PayPal sell-off, this sell-off in some of the other stocks, Square, Wayfair, other ones that are at all-time lows. Watch my video that I made earlier about the PEG ratios for 10 stocks, but look at them: Snap, EXPI, SoFi, Roku, Wayfair, Corsair, PayPal, Hood, Square, Disney, Trade Desk, other ones that were getting hurt. Airbnb, Matterport, Nvidia, Net, Lemonade, Palantir, Shift. These are pain ones. Okay. Alright, we're gonna look at the sticks again here. So, oh, look at that. The spike's already ticking up a little bit. Seriously, I mean, any dip you're gonna get at the end of the day here is a blessing. And we're gonna look at individual stocks. Just a second. Okay. Let's give CNBC like 30 seconds to talk.
We'll be doing emergency stimulus. In fact, if you look at areas like the housing market, it's been counterproductive. Sticker shock on homes actually slowing the number of transactions. So nobody wants to see more of this. It's good that it's coming to an end. I would point out that on a net basis, we are still adding liquidity to the system. We're just doing so more slowly than we were. So to me, that's still outrageous, but I understand this has to take place in a progression. Big picture, it's a very weird bounce today. It's respectable, but it seems to be very defensive. You look at staples ripping to all-time highs, McDonald's, Pepsi, Coke. You look at Costco, which I would consider to be defensive. XLU, which is the utilities, making a 52-week high. Healthcare making an all-time high, also defensive. So that's not a bad thing. I'm just pointing it out. It doesn't look like people are like getting all pulled up on the economy. So
I am.
Obviously is adding a lot of strength here, up another 2%, getting back to that record high. So that's where we are. It's a good thing. It's not a bad thing. But overall, I think most of what we're seeing here is not a renewed exuberance. I think it's just people saying, okay, the comet missed Earth again. Great news.
No problem. I'll place my bets against you because I think it's so renewed. I guess I wouldn't say exuberance. I think fear is going away. Okay, I posted the video. You watched me record. Okay. Ooh, look at that. Tesla, let's go. Oh, it's happening. Oh, Corsair's up 4%, and I got calls on that one too, puppy. Let's go. Oh, yes. Ooh, some of the small caps are moving. Ooh, oh, Nvidia over 300. Let's go. Just bought a bunch of that too. Oh my gosh, yes. HUD 8's moving. EXPI, perfect. Just bought that this morning. Good run. Cloudflare, still a long way to go on Cloudflare, but this is good. Higher valuation on Cloudflare, so be careful on that one. Etsy, I forgot to buy Etsy. I bought like literally everything I wanted to this morning, except for Etsy. Well, that's okay. I bought a ton of stuff. I kind of burned all my money, but I did want to add to Etsy, and I didn't buy that one. Roku recovering. Let's go. That's awesome. Very good. Let's see here. Okay. Trying to get. Let's see here. Okay. Then we've got. Let's see what else we have. Okay, recovery stocks. Wait a sec. Are they recovering now? Let's see here. Recovery stocks are recovering. Yeah, it does look that way a little bit. Look at that recovery you got on the recovery stocks. You know why they were falling? It was because you had, what's it called? Jerome talking about the Delta surge. The Delta surge is what freaked these guys out. Look at that, 1790 on Carnival. It's not bad. I mean, I'm not touching these recovery things because I think the case for it we're going to get is going to be extreme. But look, Disney's back up, Visa's back up, Matterport went positive. Holy smokes, we had so much red this morning. It was so juicy. Let's see what else here. Lemonade, I can't believe Lemonade's almost up 7%. But then again, it sold out so much. Nvidia's on a run now. Oh yeah, let's go. EXPI 6%, awesome. Corsair 5. Etsy's up 5. I'm trying to look. Look, Affirm at 110, still not a bad deal. You've got Enphase at 204, not a bad deal, y'all. Not a bad deal at all. SoFi at 1511, it's not bad. Oh, Robinhood, let's go. It's going back to 20. Yes. Perfect. Oh, I bought 420 short-term options on this sucker this morning. Let's go. Oh, that's good. It's literally knock on wood, that it stays this way. We don't end up getting rug pulled this morning or later today, because I'm going to get destroyed if we get rug pulled later. But this is literally unfolding the way we expected it would unfold. Max pain right before the potential rug pull, which we didn't expect, but that's what the market was pricing in, was some potential, shocker, which is not what JPOW promised us to do. JPOW promised us to be very transparent, and I know a lot of you don't trust JPOW, but and I don't blame you, because I lost a little bit of respect when he started, like, conveniently right around the time he, his job is up for renewal, he starts kind of sucking up to Biden a little bit more. I didn't love that, but, otherwise I do trust the guy. Okay, I'm just going to stop talking about that. So, let's see. Okay, Kobe says, I hate watching this guy celebrate. Dude, Kobe, I didn't know you were still around, man. I'm sorry, that's probably too soon. Sorry. Oh, man. Blessings to Kobe. That was so terrible. That only happened like 20 minutes away from where I live. It's kind of sad. Really sad. Scary. Anyway, okay, where was I? Okay, so Toast recovering a little bit. Falling a little bit into the close. SPY still rallying into the close. Look at that volume. Okay, so that little bit of sell there turned into a buy signal for a lot of folks. Okay. Looking for more. I also bought a bunch of crypto this morning. Just actually within the last few hours here, a couple hours. Voyager Digital up. I wouldn't be if we get a good bounce here off, and we are. This is risky, but HUT, folks. HUT might be a place to go. Very risky. Hold on. Let me look here before I do anything. Okay. I'm going to look at HUT. I'm going to go 93s at in the money. Can I get something in the money? That puts me at $9. What are we at now? $8.60. That puts me at $9.25 break even. Why am I going out that far then? Screw going out that far. Let's go to so risky, so dumb. Stop doing it. Too risky. Oh, we only have a minute left to go. Oh, God. Okay, January spreads super tight for Jan. And we're going to go for 750s, 5s, put me at 360. That puts me right at the money where we are right now. That I feel like is almost like a free op. What do I want to do? Oh my god. Can I place the order? Nope, can't place my order. Dang it, I'm not going to get it through. Why? Screw you, Chase. Oh, I got a little bit in. Okay. It's not as much as I wanted. I only got a little bit in. Yeah, there's no way I'm going to get more. Come on, Chase, you screwed me. I mean, we're gonna close before if I try putting in more, there's no way. There's no way. Call, come on, Chase, you suck balls. Am I gonna make it? No, there's no way. That didn't go through. Dang it!
And welcome to Closing Bell. That other sound you hear is Wilt's phone ringing from all the MLS fans watching today. I'm Kayla Tausche in for Sarah Eisen along with Wilfred Frost. Eli Lilly, the biggest winner in the S&P 500 today after announcing very strong guidance. Coming up, we'll discuss that outlook in an interview with the company's CEO. You will not want to miss that. Plus,
dang, that was exhausting. Oh, dang it. Alright, oh well. I think we did good. Okay, so what happened?
This is Jay, inventor of the Pillow Cube, and this is a substantially more attractive version of Jay we hired to...
Comes to what is happening with Bitcoin dominance. Bitcoin dominance for me is quite clearly going to break to the downside, and it's just going to keep going down and down and down, which should, in theory, mean that Bitcoin is going up and the price of the altcoin market is going up as well. Somebody saying, I'm actually Portuguese and I can help you. I reached out to you on Twitter one time. If I don't respond to you and you've reached out to me, it's not because I'm ignoring you. It's because like 10,000 other people reached out to me as well on all the different platforms. So it's very difficult for me. But if I see something that's interesting, if you just keep sending it to me over and over again, eventually it'll pop to the top of my notifications and I will see it. The best way to get in contact with me is generally through email. So you'll find a link to my email in my YouTube channel page. And it's one of the things where it's hidden until you press a button and then you press the robot and then you can see it. Daffy price is now 4.2 cents apparently, so that's nice. That's going back to the upside. Yeah, this is just look like you might come down, maybe hit this yellow line again. We shall see. If you're just joining the stream right now, guys, learn to speak. If you're just joining the stream right now, please do subscribe to the channel and slap a like on it. Now 1,200 likes, which is fantastic. Somebody is saying, I own a Formula car. I would like to drive your Formula car. I started using my silly cars again just because I got such the racing bug when I was out there. So I actually won a charity dinner, so I'm going to have lunch with the founder of Lamborghini. I'm going to drive a Formula 1 car in France, and I'm going to drive cars around Antarctica, and I don't know as well. I basically spent £17,000 at a charity auction. And I was literally the only person bidding, so I thought it was meant to be for charity. Oh, that was the other thing. It annoyed me. Rich people are tight, or they don't have money, so they spend £300,000 on a watch, and they can't afford to put £5,000 into a charity auction. Are you pathetic? Why aren't you bidding on a charity auction? It's for charity. So I spent £17,000 anyway giving it to charity. So I'll make a tweet about it at some point. I Somebody's saying I want to be your Bottas number 2 driver. I think Crypto Rover's wanting to be my Bottas. He's already asking me about it. I do think I've got a couple of contenders. So basically, the CEO of Caster is a friend of mine, and he likes racing. And then there's also Crypto Rover, which also likes racing. So maybe between the three of us, because you get 3 seats in one of these low series Formula teams, maybe between the 3 of us, we could actually have our own Formula team and do the racing. But that's what I want to do. I'm young still. I'm still young enough to do it, and I won't be young enough to do it in 5 years' time. So I want to get it done as soon as possible. It's been a dream of mine. I've achieved most of the other stuff, so why not have a go at that? That's what I'm thinking. Somebody's saying Hodoi is pumping hard. Let's check in on Hodoi. Hodoi! Is it pumping? Oh, yes, it is. Wow, wait, this is very nice to see. 11 cents up to 13 cents. By the way, if you don't already know, you can now buy Hodoi. Why is he not on? Oh, there it is. You can now buy Hodoi on crypto.com. And it's the best place to buy it. Again, you'll find the crypto.com link, I think, in today's video description. I don't know. I do have a referral link though, so if you wouldn't mind using my crypto.com referral link, that would be great. Somebody saying MG Jeremy loves to race. Let him race with you. Oh, yes, MG is me. Jeremy loves to race. Let him race with you. Diana, I've seen you keep messaging me. I'm very sorry. I keep not replying. I will do it at some point. It's been back from Abu Dhabi and I've been all over the place. That's why we're on a live stream today, not a video. Just because it's crazy times. The market right now is profitable, but also it's very, very volatile. Somebody's saying, do I go into IPOs still? Not IPOs, I go into IDOs and IEOs. The platform that I use to go into all the things is this one. I use Polka Starter. I'm going into Rainmaker, Crypto Fight Club, Galaxy Fight Club, and Impact Market, and Safel. I'm going to go into all of them basically, because I hold several $100,000 of Pulse coins because we were buying them when they were 10 cents per coin. I was telling everybody to buy these coins, now it's like $3 per coin. But essentially when we was buying those coins back then, it allows me to get into all these things just because I have so many coins. So yeah, for me, I invest in every single thing that goes through Polka Starter, every single thing that goes through Paid Ignition, every single thing that goes through DAO Maker, every single thing that goes through Star Launch. I hold a lot of these Launchpad coins, and I invest in every single thing that I can. Somebody's saying my crypto.com link is not in the description of today's video. If you could go on a different video, or one of my old videos, it'll be in one of my old videos. It's still the same link. I appreciate it anyway. If you want a different account, by the way, check out Swissborg. You'll find